What's up YouTube, Todd Horst here with another small account challenge update. So first of all, we'll look at SPY. This has behaved exactly as I would want it to. It's not uncommon for a ticker to go through an SMA and then test it out, see how it feels, and then comes back up. So we didn't even get down to the 100-day level, which certainly was a possibility. But at this point, we're up now and we have two levels of support here very clearly. And we're actually up near all-time highs. So it's hard to feel concerned about the market generally speaking. Now, talking about different sectors is a different story. So if you're heavy in the tech sector, which I typically am, at least during the COVID recovery, my account's still recovering for sure. But it is showing signs of life now, which is at least nice. Okay, so yeah, so SPY is looking good. We didn't see a look like this, which late last year actually came down and touched the 100. It got close, obviously, but this support down here around 370, 375 really acted as support, and it didn't even need to come the whole way down. So if we go over and look at our account, we're sitting at 675 basically. And so we'll go over these positions here and how close they are. So Microsoft, we have the 240. So let me go ahead and clean this chart up. Okay, so if we put the line here for 240, it's down here. We'll hit edit. And okay, so we can see we're not far at all away from being profitable. Obviously, we're crossing over the 20-day here, so that's going to act as resistance for a moment until we can cleanly come up. But the part that gives me confidence here is that both MACD and RSI are actually, heating up. And if we were at the top, something like this look where RSI and MACD are pretty overbought, then the odds of this failing are pretty great. But even then, it would most likely come down, the 50-day would catch it, and then it would bounce back up. But at this point, we're still heating up, so I really don't see how we're not going to get over this, especially by next week. Now, we're at Thursday here, so I'm not sure that it'll make it up this week. Obviously very possible. Once it does, though, we should be able to get a bump up here maybe to 237, and that's just a stone's throw away from 240, which would make us profitable, or profitable-ish. So technically our spread might still be under because we had to roll it for such a large debit. And that's why I'm saying, if you saw my tweets, that I'm basically going to, anyone that I had to roll for a large debit, I'm just going to try to get out of those for a scratch sooner rather than later, so that I can take that capital, reinvest it in something else that I can have a better risk reward and come out ahead. So that basically means, large parts of February and March time-wise were lost, but obviously that's better than losing money. So let's go over to plug here. And the strike we're dealing with here is 60, so that's the way up here again. And now this one did come down to the 100-day, but again, MACD, RSI are both heating up. We do have weak green volume here. That is a little concerning, but what I'm also looking at is the red volume, the selling, getting weaker as well. So once a stock recovers like this, it takes people a little bit of time to get confidence that it's not going to continue to plummet. Obviously, the one concerning thing here is we have a look like that where it's trending down overall. However, I think that's very quickly again will be overtaken, and then we'll be up here, and of course each one of these lines act as resistance on the way up. That doesn't mean that it's going to be a hard bounce down. It just means that the stock is going to hang there for a minute before it decides whether it wants to go through it or bounce back down. And then repeated repeatedly hitting a support or resistance isn't necessarily a good thing. That could potentially, if it bounced off of that and kept bouncing off of it, it's going to just go through the supports that it has lined up here. But anyway, I think we'll get a nice bump here. Again, because of the positioning of the MACD and RSI. Once we get above this, we should expect a fairly nice green candle, which could put us around 50, 52, somewhere in here. And then, of course, we'll be encountering this. So I would look by from mid next week to be in this range here. At that point, we might even be able to roll for a credit. That may or may not be a good idea to try to get our R&R a little bit better than what it is at the moment. So QCOM, we had the 140. Okay, so same chart kind of on all of these as far as the RSI and MACD are concerned. However, this one is way down here at the 200, I believe. Let me adjust that. There we go. So it did bounce off the 200, which is good. The downside is that it took that far to get to it, and we're still abiding by this downtrend red line. The reason I have all these gold lines is this is totally excessive. Typically, I wouldn't do that. But I was trying to illustrate a point how we have a gap here, and then there are levels of support. I think people kind of view support as a hard stop, and that's not the way it works. There are levels of support. And so at each point, it can act as a safety net to catch you, but it doesn't have to. It can very easily blow through 5 supports, and it can very easily do that on the way up too on resistances. So the point here is, if you're really concerned about all the levels, the lowest something could go, you want to draw out all your lines and then sort of count it up. If you have 30 supports between here and where your position is, or where you fear it could go, and you have 30 supports there, it's very doubtful that it's going to go through all of those supports. Generally speaking, supports are, $5 to $10 apart. That's just the market liking round numbers. So you can view it either which way, that it's coming up on a round number. And so it's going to act as support or resistance without even drawing the lines. You can basically tell that. Anyway, so with this one, we have to get to 140, which is this yellow line. And we're sitting at 131. Honestly, that is very close, assuming it can break over this red line and start making some headway. Then 140 is not a problem in my eyes at all. Again, this travels heavily with Apple, and Apple's having a little bit of a tough time at the moment. So if this red line holds and we continue to see down, I might just close out of the position for whatever cash I can get out of it and consider it a loss. But I definitely will not roll for another debit because we're only going to extend our losses. So there's no point in doing that. Actually, yeah, okay. So let's go to Tesla, which we have the 785. $785. Okay. So 785 here is this yellow line. Again, Tesla can move $100 in a day if it wants to. So, if you're talking about, oh, well, that's so far away. The other stocks we were looking at were $9 away, and this one's $100 away, and that scares you. That's true, but you have to put things into context. Those are cheaper stocks, or they don't move as much. They're not as volatile. So Tesla can very, very easily get up into this range if it wanted to. That doesn't mean it will. Again, we're getting close here where we might be able to take the position off for a wash, or maybe even get a credit and try to roll it out if we still believe in that position. And it's hard to determine what that looks like. You have to let the market play out for the next couple days, at least, the next weeks. And it's just a matter of seeing how things develop and making a judgment call whether this is still a good position to be in, or if it's if it's no longer good. And obviously, you have to make hard decisions where you don't want to lose on a position, but the reality is you can't just keep dumping money into a position, rolling for debit, because it's obvious you're just sinking more money into a losing position when you could be using that to enter in a new position. So I changed that to the 20-day here, and to get rid of the 200 line, and then we can see that it came down, held up on the 50-day a little bit, then actually dropped right through the 100-day. I don't think it made it down to the 200-day. That was pretty far down there, right? Yeah, never made it that far. But it did plunge through the 100-day pretty easily. But now we're coming back up, and the 20-day is acting as resistance for these 2 days. Sometimes the third day is the charm, so I would not be surprised at all to see tomorrow us be above the 20-day. And one thing that I'm looking at here is the low for the day is getting higher, so higher lows here. The candle on this wick is only mid of this candle, and then that's of course not the current price. Hopefully, if Tesla can stay here at close, then that would be making higher lows, and obviously, that bodes well. Again, considering the MACD and RSI, low red volume today. So actually today would be a pretty good day to enter in a new position into Tesla, looking for the bump up tomorrow. So if you want to do some lotto calls for something like, 750, and I don't know that it would get that high, but you could buy the 750s and then just look for the increase in value. Never look for it to go in the money. So close out the position, obviously, by lunch or something like that. That could be a good play. Anyway, because I had to roll for a debit, and the more I'm thinking about it, I don't know that I rolled the Qualcomm, so we'll see on that one. But anyway, again, down to $76 buying power. Not that much if I had to restart, but I did roll the Tesla, and that's actually why it's showing the positive. Let me pause here. Okay, I'm back here with the Tasty Tracker account, and you can tell which ones again that I've rolled. Microsoft I did not roll. Plug I did roll, that's the one there. Qualcomm I did not roll, and Tesla I did roll. And typically when you roll, the brokers want to take the credit you collected or the new position as it was, and so as it was entered, and they don't consider it a roll. So while I view this as having collected 1.7 for the Tesla, they might consider it to be more. So let's go in here. I'm never going to be able to do this on the fly. I'm not used to their interface. Okay, but should be average credit 4. I think that's where it would say what I have in the system. So they're reading it as 4 because I rolled it, whereas I'm actually reading it as 1.7. So let's go to one that I didn't roll. Qualcomm 1.72 is what I have. Yeah, 1.72. Okay, so that's perfect. So when you roll a position, and Tastyworks is the same way, it's one of the reasons I created Tasty Tracker, because it frustrated me that it's showing as a profit now. It's showing I'm up 10%, $40, when in reality it's currently trading at 360, 350, somewhere in there, and I only collected 1.7, which means I'm down whatever 50% on the trade still, because if I were to close this now, buy it back, even though I'm looking at the UI and I'm thinking, oh, I'm closing for a $45 profit. No, I'm closing at 360 and I only collected 172, which means I lost basically $200. Okay, so that is one of the reasons I created this site, to help with rolling so that you know exactly when you can close it. So, so this position is not green, even though it shows green, and I need to use these numbers here, especially down here, to know when to close it. Because it's Robinhood and there are no commissions, I can go ahead and close for 1.7, and then that will be a scratch. Obviously, I like to close it, 1.68, something like that, so that I can feel like I had a win. But anyway, yeah, you could still aim for 85 if you thought that was appropriate. I don't think it's appropriate for these two, for Plug and Tesla, at least at this point. We will see the closer we get to expiration whether it makes sense. The value of these should drop rather quickly, especially the closer to expiration we get. So we have 36 days. As we get closer, it will drop quicker and quicker and quicker to really suck out that $400 that we essentially opened this position for. So yeah. Anyway, I'm sure that was confusing to a lot of people. So let me know what the questions are, and I'll try to answer them maybe a little bit more thoughtfully in the comments below. But I'll leave it there, and I'll talk to you next time. Thanks.